Good afternoon, traders. This is Christian from Hertz Traffic and Trade Group, and this is your end of day market video for Monday, October 7th. Well, this was kind of um, another one of these felt like unusual days, and I'll explain why in just a second. But one of the probably the first things that you see on your screen there is the VIX up 18% for the day. So for the most part, we kind of just stayed in a very tight range. There wasn't much price movement in the indices, and you had things like the semiconductors outperforming for a good portion of the day. So we got to about like 2 o'clock, and we actually saw some sell programs that came through, which were pretty decent sell programs. I think the tick index got to about a negative 1400 at one point. All right, so this basically looks at advancing versus declining issues and at a given time. And it's really like a good barometer of like, hey, if there's news on the tape or if there's a sell program or buy program that hits the tape, if there's something extreme going on. And you can see this is just the tick index over the last 10 days. Sorry for my voice. I'm kind of getting over a cold, I guess, or some type of allergy. I have no idea. But that's another story. But we got to like negative 1400. And again, this was at like 2:30 today. So pretty calm, like in terms of, and I kept on, it was kind of a head scratcher to me that the VIX kept on going higher. And meanwhile, we just really didn't see a breakdown. So question is, when you look at some of these areas today, and by the way, risk disclaimer, make sure you read that. Everything that I'm going through is for information purposes only, not giving out any advice or recommendations. But um, where does this leave us, I guess, for the rest of the week? Because we got a pretty complicated week ahead of us. Number one, TLT, I think people finally noticed today that TLT has been going down, and meaning interest rates have been moving higher, higher, and higher. I know it gets confusing because every time I hear a commentator on CNBC or something like that, they talk about, oh, well, this should be great for lower interest rates. Well, remember, that's what the Fed controls, right? And the Fed just kind of move things. The other thing that people don't understand, I think, is that the Fed they're like, oh my God, the Fed moved 50 basis points. Well, they were really late in the situation. And if you don't believe me, look at what the 2 year has been doing, right? And I show this to people and they still like this has not been updated for today, but this is the 2 year yield versus the Fed funds rate. Right, the Fed funds rate is 5%. So you kind of have to get your mind out of like, oh my God, they did 50 basis points instead of 25. It's just a catch-up move, right? They're really, really late in moving. That's my takeaway when you look at what the rest of the yield curve has been doing. In this case, 2 year yields. All right. But what we have going on since, again, this hasn't been updated, but you can see this is yields are starting to move back up. Don't really have a great reasoning for that, but the takeaway is just to kind of understand what's going on here. So if you look at TLT, and again, the TLT is not the 2 year, it's more of the longer end of the curve, longer term interest rates. And you notice what's been going on here. Oh, sorry, look at this percentage change over here. For the last 6 days, bonds have been going down and rates have been going up. So I did a video last week and I was talking about how this is affecting some things and not other things. So first of all, let's just take a quick look at what TLT is doing, and then we'll go over like the index charts because I think this is somewhat fundamental to what's going on here. We're starting to see like a pretty here's where we were just about 2 weeks ago. And you heard a whole bunch of good things like mortgage rates are coming down and different rates like auto loan rates are going down. But this was September 16th, right? This is almost a month ago. And since then, right, prices have been retreating and rates are going up. Remember, interest rates are inverse to this. So here's the 10. So just to kind of give you a sense, because again, why am I spending so much time on bonds? Because I think that this kind of it has something to it and it does have impact in certain areas. So, and this is why I think breadth is also declining. Here's the 10 year yield, right? This has been ripping back to the upside. So we're basically back to where we were all the way in the beginning of August. And this is the 10-year, right? Again, a little bit different than TLT, different than overnight rates, which the Fed controls, and different than the 2 years. So what's been happening? Well, things like consumer staples have been breaking down, right? There's just a less of a need to be in some of these areas that are kind of yield proxies. Now, XLU kind of held this off for a while because things like CEG were going up, VST because of this nuclear power type trade, but it's starting to come undone pretty decently, and it's a big down day for XLU. Also, I tweeted this out. I didn't mean to be the kiss of death, but look at what happened with insurance names today as well, right? So they have an interest rate component. So pretty decent move down. And this is going to pull down XLF to some extent because there's a lot of insurance companies that are in XLF. Some people think XLF and they're like banks. No. Well, banks are in there, but it's also exchange stocks and so on and so forth. By the way, so even when we get outside of these things, a lot of stocks breaking down. Look at what happened to the Nasdaq, right? This is the Nasdaq exchange, right? It looks like, what does this look like to you? Left shoulder, right shoulder, sorry, left shoulder, head, right shoulder. It looks like some form of a head and shoulders to me, but here's another one, right? Nothing to do with what I just mentioned, but there's just a lot of stocks that I see selling off. Here's TJX, right? This has been a very strong name, right? It's a stronger retail name, but look at this slide down today too. So just seeing this in a lot of places, right? Now, if you're concentrated in growth stocks, especially in what Nvidia was doing today, probably like today you're like, oh, this was a great day for the market. So again, it just depends what stocks are in. Now, note that, excuse me, Nvidia took out this version point of control and may just sit here, right? People don't like to hear that. But sometimes when these version point of controls get taken out, right, we try to go higher and we don't go anywhere, right? This is one I talked about last week because I was long silver. I'm not long silver anymore, but look at what happened here, right? Price took out this upside VPOC. So again, this is overhead supply. Sometimes price can get through it. It becomes a battleground between buyers and sellers, but here the sellers won out, and this doesn't look it doesn't look horrible, but it got rejected at the breakout point. Right. And then the other thing that really hasn't been getting much attention is the stronger dollar. Look at the move that the dollar's made over the last week. Right. I don't know why more people aren't talking about this, but we'll see where this takes us this week. Now, we're also in the middle of the Jewish holiday. So Rosh Hashanah was last week, and then Yom Kippur is on the 11th. So it wouldn't surprise me that the market is weakening here a little bit. So I would just keep that in mind, and just understand some of these short-term forces, because over here, we'll take a look at this. Now we'll hit up the SPY chart, but we've got our levels to watch for now. We bounced. It's amazing. Last week, I didn't really understand why the market was going up as much as it was on a jobs report that was doing what it's doing. I just thought we would kind of continue to chop around. But hey, if you took advantage and you sold a little bit into that, you did good, right? I think right now you want to be selling rips and for now still buying dips until it changes. But notice last week we did not take out the previous high, right? And it would have been wonderful if we would have gotten follow through on this today, but we didn't. So we've got a lower high from the previous week. Now we haven't broken down, and that's why I'm bringing up this 1 hour chart. And where I would get a little bit more nervous is if we broke 566.72 decisively. Let's look at the Qs for a minute, right? Qs still holding support, right? We've got bearish 80% rule for the week for this week's value area, but we're holding the top of the value area. So first, watch 481.52, and then it would make me nervous if we broke 479.10 decisively, right? Notice we got down to this level last week, and it held. So, we're kind of just digesting. And I don't think that you want to rule anything out until we break out of this range. And I would also note last week, lower high than where we were in the beginning of the week. All right. So all not that great. AMD. I did go long some AMD today. I was long Nvidia coming into today. We'll see if it carries. This has an event and saw some call activity. So even though I'm not liking the internals of the market, I don't like what bonds and what the dollar are doing. I'm not fully into cash. I'm still holding a number of positions because they're working for me. They're not broken down. But if I have to reduce risk, absolutely will. And I plan to be long AMD. I hope it rallies into its event. I'm looking for the buy the rumor, sell the news, meaning like let it rally. Maybe it will rally going into the event, and then I may take the whole trade off uh, before the 10th or leave a small portion on. But for now, seeing bullish option activity. All right, guys, I'm going to leave it there because my voice is horrible and I apologize for that. Have a great night. See you tomorrow.